Every 4 years, Bitcoin creates a new wave of millionaires. And every 4 years, millions of people kick themselves for missing out. The 2024 halving just triggered Bitcoin's surge past $93,000. But here's what most people don't realize. This cycle is just getting started. Today, we're exploring Bitcoin's most powerful price catalyst, the halving cycle. This isn't speculation or hype, it's mathematical certainty coded into Bitcoin's DNA. By the end of this video, you'll understand exactly how these cycles work, and more importantly, how to position yourself for what comes next. If you're ready to make some serious cash, let's dive in. What's up, everyone? I'm Jay, and you made it to the Cash Lab. For those of you who are new here, welcome home. You're now part of a community that turns tech into real profit opportunities. We've been investing in blockchain projects since the 2017 bull run and helping our community build lasting wealth through every market cycle. Imagine if we were able to predict when Bitcoin might experience its next major price surge. That's exactly what understanding halving cycles could help you do. These events have consistently triggered some of the biggest bull runs in crypto history. Today we'll break down why halvings create the perfect storm for price growth, how these cycles ripple through the entire crypto market, and the exact dates you need to mark on your calendar. But first, let's understand what actually happens during a halving. Before we continue, let's get the boring stuff out of the way. The crypto market is notoriously unpredictable. What you're about to learn is based on historical data and analysis, not financial advice. Even though we're talking about one of crypto's most established patterns, there's no such thing as a guaranteed return in this market. Never risk money you can't afford to lose, and always do your own research. Don't just take our word for it. Learn how to analyze these cycles yourself. Here's the simplest way to understanding the Bitcoin halving. Imagine you're running a gold mine that consistently produces 100 ounces of gold per month. Then one day, no matter what you do, that same mine only produces 50 ounces. That's exactly what happens with Bitcoin every 4 years. The reward miners receive gets cut in half. Let me show you why this is genius. Bitcoin's total supply is capped at 21 million coins. Every 210,000 blocks, roughly 4 years, the mining reward is cut in half. This means Bitcoin becomes increasingly scarce over time. Let's look at the impact of previous halvings. Back in 2012, during the first ever halving, Bitcoin was sitting at just $12. Yep, you heard that right, $12. Within months, it soared past $1,000, rewarding early believers with an incredible 8,300% return. Think about that. A $1,000 investment turned into $83,000. Fast forward to 2016, the second halving. Bitcoin was trading around $650, and skeptics were saying the big gains are over. Well, those skeptics went real quiet when Bitcoin rocketed to nearly $20,000, delivering another massive 2,900% gain. That's when mainstream media really started paying attention. Then came the 2020s halving. Right in the middle of a global pandemic, all financial markets were in a massive correction. Bitcoin dipped to a low of 3,200. And once again, the doubters were out in force. But what happened next? It exploded past 68,000, proving the halving effect was still very much alive with a 600% jump. And now we're watching the fourth halving play out in real time. Bitcoin's already pushing past $90,000, and if history rhymes even a little bit, well, I'll let you do the math on what could happen next. But remember, past performance doesn't guarantee future results. It just makes for one incredibly compelling pattern. Let me share something crucial about Bitcoin cycle timing, something that could completely change how you approach these markets. There's a pretty consistent pattern. About 17 to 18 months after each cycle peak, the market typically finds its bottom. This isn't just coincidence, it's been remarkably consistent across multiple cycles. This bottom usually happens right when mainstream interest is at its lowest. And from there, we typically see about 18 months of gradual accumulation and price growth leading into the next halving. It's almost poetic. 18 months down to shake out the weak hands, followed by 18 months of steady growth as smart money positions for the next cycle. This is why timing matters so much in crypto. While most people are waiting for the halving itself, the real opportunity often comes in that quiet period, roughly a year and a half after the previous top. That's when you want to be quietly building your position. Let's talk about something most influencers won't tell you: how to recognize when the party might be ending. When everyone is posting all their gains and the Coinbase app is trending #1 in the app stores, that's your signal. They're all going to be telling you that it's not the top, while crypto dominates the news cycle and Google searches explode with retail FOMO. This is precisely when you should start selling, when everyone else is super bullish and euphoric. The data tells us this usually happens between 530 to 550 days after each halving. That's roughly a year and a half of steady growth. And here's the key. Please burn this into your memory. You don't want to get greedy and try to catch the absolute peak. That's a game almost everyone loses. Instead, think about it like this. Once we're about 450 days post-halving, you should start taking small portions of profit off the table. Maybe it's 10% here, another 10% there. When you hit the 500-day mark, you might want to be a little bit more aggressive with your profit taking. This isn't about timing the exact top. It's about playing the probabilities and protecting your gains. Because let me tell you, nothing hurts more than watching life-changing profits evaporate because you got too greedy waiting for just a little bit more. Remember, the same people who cry about selling too early are usually the same ones who end up holding through the entire crash. Having some profit is infinitely better than having perfect timing but missing the exit entirely. Bitcoin halvings don't just affect Bitcoin. They create waves throughout the entire crypto market. We call this the tsunami effect. While Bitcoin might give us another 1x from here, the real treasure hunt is in the altcoin market. Look for projects with solid teams and a strong marketing presence. Do your homework. Check Twitter and YouTube. See what's building buzz in the crypto community. Ask yourself, is this project getting attention and does it have real utility? That's where those potential 10, 20, even 50x gains could be hiding. That's where you'll find the potential for life-changing returns. Lucky for you, finding these gems is exactly what we do here at Cash Lab. The blueprint is right in front of us. Bitcoin's halving cycles have been creating generational wealth for over a decade. Now you know exactly what to watch for, when to enter, and most importantly, when to take profits. Remember, fortune favors the patient. If you're ready to dive deeper into the opportunities this market creates, make sure you're subscribed. We're dropping new videos every week to keep you updated. Drop a comment below with your thoughts on where Bitcoin is headed next. And if you'd like to learn more about some of our top altcoin picks for the coming year, click here. Thanks for watching.